Hello, everyone. Welcome to another weekly recap. This is Trader Travis, and my partner in profit, Peter, is on the line. And we're going to cover the market. It's going to be a little bit different today. We don't have much to talk about trading wise. Sometimes you have these slow periods in trading. So that's what we're going to do. But even still, we forgot. I think we've got strayed away from our standard disclaimers. Everything we share is for informational and educational purposes only. Please don't take this as investment advice. And so what I am going to do is start off covering the general market, my game plan for my trades coming up this week. And then Peter's going to kind of talk about a topic that's near and dear to his heart, mentorship. And then I have a reveal for everybody when we cover that. All right, so two things. I'll show both. I like to show both. Looks like Peter's got trades filling.
Sorry, so, yeah. The one we were just talking about.
I recognize that ding. So was that part of your trade plan, though? That's what I meant to.
Yeah.
Okay.
It was. So, like I said, it was. Usually I'll use a weekly, but when I was looking at the SPX with the red dailies, I'm like, a lot of the red dailies have come right before a red weekly. And so if it comes, I'm going to most likely use the red daily. So today it came, and it's a big down day today too. So I'll go out on a limb and say we're probably going to see a red weekly come up here if we see another down day, just because if you look at SPX, that's what it's done. So,
okay.
Anyway.
All right. I just want to make sure because I'm like, don't be trying to change your trade plan midstream, buddy. That's a no. But
no, I usually don't. And I tell students I don't normally use the red daily, especially if I'm way out. If I was way out of the money, I wouldn't have used the red daily. But if you go back and you look at Market Club, you can see.
Yeah, I'm looking at that. Yep.
Right. You see when we get red dailies with a big drop. You get a red weekly afterwards. When you get a red daily with a small drop, you get a green daily afterwards.
Yep. Usually
so,
next day.
Yeah. So I was like, I don't want to do that. I don't want to play with that. So I might as well take whatever profit I can get. So that's kind of what I did.
Okay. And going back to the disclaimer here for somebody to think about, because somebody could, and I've done this in the past, you could hear that, and then you all become hypersensitive to dailies because you're like, well, Peter did it, and Peter said that, well, after a red daily, red weekly comes, and that's not always the case. I'm looking at my chart. We can see a bunch of red dailies where no weekly came. It's all situational on a case-by-case basis. So, for example, I'm using today's red daily, and I want to show you two ways. If you use software like me, I have a red daily. I'm getting out some of my call trades. That was part of my plan, though. You're like, why? I don't usually trade on dailies. It's just a pain in the butt. You can look how many entry and exits. You'd be all over the place. But the reason I decided to, and I even put it here for members, I said, hey, if we get another signal, then I would probably scale back some of my risk. And the reason why is I've hit my goals already for the year. My account has already passed my target of 60% increase. So why push my luck, right? I don't want to be greedy and push my luck and get caught in a correction. Now, if I had not hit my 60% goal for the year, I wouldn't be getting out on a daily. I was like, well, let me just wait it out until I get a weekly. But now I'm like, I don't want to push my luck. I'm way ahead. And so if I get a daily, I'm going to scale back some of my risk. I'm not getting out of all of my positions, but I'm scaling back my risk. My riskiest positions right now are like my call options. Matter of fact, let me pull up my broker account so I can show you. And this is both for paper and real money. In my real money personal account right now, I'm probably down like $6,000. I'm waiting till this recap is over so I can hurry up and scurry to my broker account and close out the trade. But we're looking here at SPY. Okay, let's look at the larger account. And we can see that, okay, well, I'm not down that much today. Let's see, 300. Okay, so it's not that much down, but still I have a lot tied up in those call options there. So I want to go ahead and reduce that risk because if we go into correction, the call options will hurt my account the worst because they dramatically decrease or increase in value. It works both ways versus other strategies I use where I'm using the cash flow strategy or renting out my stock shares. So renting out my stock shares, I absolutely love both in up and down markets because you can structure those so that they're win-win no matter what. Market goes down, great. I keep the money I made by renting out my stock shares. Market goes up, cool. I still get to keep the money I made by renting out my stock shares. I may have to give up my house or give up my stocks, but that's okay. I can get back in them and then make more money again. So anyway, so I've already showed market clubs red daily, letting you know in the next few days the market's probably going down. That's what that signal tells us. If you don't use software, you can come and use simple moving averages or anything actually. You can use trend lines if you want, and you can see that on at least SPY here that prices are closing below the 7-day moving average. And so you can go back historically and look at the times it traded below the 7-day and what happened afterwards. Sometimes it recovers the next day, sometimes it doesn't. But I will tell you that before every single little correction, or you will see a close below a shorter term moving average, then you will see a close below a longer term moving average, and then you'll see the moving averages cross and all the other good stuff for those who use that kind of manual assistance. So I don't know what's going to happen. I do know corrections happen on average once a year. A correction is when the market goes back 10%. We haven't goes down 10% or corrects 10%. We haven't had that yet. So we've had a small 5% one. So I don't know if that was our correction for the year because, again, it's on average 10%. It doesn't mean each correction is 10%. It just means on average. They could be 20%, like in 2018. That was a correction. It was a 20% correction, and then it recovered just as quick as it corrected. And so, I'm cautious. I'm being cautiously optimistic right now, but I'm going to scale back my risk. So that is what I am doing, and that is all I have. So I am turning the floor over to Peter. Oh, I forgot to let everybody know I'm still on my fast. Peter's giving me a hard time.
Something I can't do.
Sorry, but
yeah, something I choose not to do.
There we go. Yeah, can't is a no. Something unwilling to do. Oh, and real quick, I'm gonna give you a hard time here. Not that I'm picking on Peter, picking on myself mainly. A lot of people are unwilling to do fast, and I'm not advising everybody to do it. Seek medical attention, talk to your doctor, all the other good stuff. But what I found is that unwillingness, there's tons of people unwilling to do fast. When people found out I'm like not drinking, I'm not eating anything, just drinking water for like 10 days, people are like, there's no way in the world, that's stupid. I can't ever do that. And that's fine. I respect that. But as you're trying to level up your success, that unwillingness, it shows up in other areas. The unwillingness to commit to trading, the unwillingness to watch videos every day, the unwillingness to push yourself, to stretch yourself out the comfort zones. At least in my own life, that unwillingness shows up in other areas. So by doing this fast, what I do is I master that unwillingness and I spank it. I'm like, no, I'm going to choose and do things that are difficult because then it makes other things in my life easier. So I'm done with my rambling. Peter, take the floor.
No, it is true. Yeah, we were talking about that. So my unwillingness to fast, but I am willing to eat properly, so I need to start doing that.
There you go.
Okay, so just to kind of recap where I was at, so you guys remember, I think last week I said it, that I was getting into, or 2 weeks ago, I got into some SPY trades because they were pretty aggressive because I was anticipating a market club green weekly. That ended up working out for me, so it's always nice when it works out. Sucks when it doesn't, but either way, my risk percentage was good. So basically what happened is whenever I do these trades, I put my 80%, I put a good till canceled order where it will automatically execute the trade when I hit 80% of the credit I received. So yesterday I was doing my work and I heard that famous sound from my thinkorswim platform going off, and I was curious what was going on, and when I looked over, they were all just exiting because I hit my 80% profit. So that was good on my SPY trades. All my SPY trades exited out. The only thing I really have left, my AT&Ts were, sorry if you guys hear this, my AT&Ts, sorry, I got exercised on my call options, and then I had sold an in the money cash secured put to get those back, and that all kind of transpired. So it changed my risk, or my mark, basically, of how much I paid for them, from 32 to 32.50, so to speak, somewhere in that time, in that range. But it's not that big a deal, because it's really not, I'm not trading this for the price on the stock. I'm trading it for the dividend. And then the only other thing I have, I was going to we talked about this last week, I was going to increase the amount of shares I have. And instead of just buying them outright, I was like, I can get a little bit of a discount, because AT&T was selling at, or it was trading at 32.50 like it is today. So instead of paying 32.50, I decided, you know what, I'll just sell a cash secured put, and the revenue I generated, I'm going to get it for less than 32.50 if I get assigned, which if AT&T stays above 33, that's what's going to happen. So that will increase my shares, which is nice. That's where I want it to be. I rolled a cash secured put out on SPY. I was able to call back the one I had, because it was generating an 80%. It was at 80%, and I'm like, instead of waiting, I'll roll that, because I want to own SPY anyway. So I did. I rolled it out and generated even more revenue. What was nice about that is the 305 call I have here, this is all profit. So even though it looks like a negative in my account, it's really not, because it was paid for by all my cash secured puts. So even if I sold these today, that's a $1,200 profit. So that's kind of nice. My SPX I got out of on the red daily. Travis kind of went into that, and it was one of my exit signals. And the reason, normally I don't use red dailies, but in this market, especially the last year and a half, the way the market's been, the red dailies, I'm more attentive to them on an exit strategy, just when the market is kind of volatile, kind of the way it's been in the last few months. So when I saw the red daily, I said, okay, that was one of my exit signals. I'm going to get out. It ended up giving me a little bit of a profit, not a ton. I think 40% or 38% was my profit on that trade. So my SPX is out. The only thing I have left is Walmart, and Walmart is, we'll see what happens. It's out of the money right now, which is great, but Walmart's not doing, it's following the market is basically what it's doing. The market's down, Walmart's down. But this thing has 52 days left, so this has got a long way to go. My SPX was expiring this week anyway, so I needed to get out of that. So that's it. The only other thing I was going to cover, and I'm going to cover it kind of quickly, is my brother asked me about it, or he said something to me the other day. He said, I need a millionaire mentor, and I totally agree with him. One of the things we talk about is mentorship. Travis is one of my millionaire mentors. I'm fortunate that, we talked about that. I'm not lucky. I actually had to work hard and irritate the crap out of him to get the where I'm at today with him. But it's something that you pay your dues for, and it's a good due to pay. It's like paying dues for homeowners or whatever, membership you have. This is one of the things that I highly encourage you to do. A couple things I would caution you about with mentors, though, is don't have competing mentors. So you can't have one mentor that competes against another, because you're just not going to get anywhere. But I asked Travis a couple things, how he picks his mentors, how he finds his mentors. And I'll actually have to re-cue that interview I did with you, Travis, a long time ago. I'll cue it up on my JP Cash Flow again and kind of throw it back out there, and I'll leave a link for you to put in this recap.
Okay.
Because we do talk about it. But mentors they'll push you out of your comfort zone. That's what Travis does for me. And that's what a good mentor will do for you. They will push you. They'll know what your goals are, because you'll tell them, and they'll push you out of your comfort zone to achieve those goals. So we kind of talk about it. It's kind of a segue. And I have two screens going on, and I have the camera. I keep looking over here because I see you over there, and my camera is forward. So there's I kind of lost my train of thought because I was let my mind go like a squirrel. But I guess I don't remember what I was talking about. But I guess there's different trains of thought with mentors, and you have to find someone. I guess the best way to put it is because you said it, Travis, it's really trial and error in anyone that makes a suggestion. My brother was asking me about Ty Lopez. I've never used Ty Lopez, but I've seen him. I haven't physically met him, personally met him, but I've seen him at a GrowthCon. I follow his website. I watch a lot of his videos. I've watched him on TED Talks, and I like his approach and his style. His approach and his style is very similar to what Travis's was with me. Travis was very coarse with me in the beginning because I wasn't following the system of the Success Academy. And that's what I was going to say. I'm kind of one of Travis's worst, best success stories for the Success Academy. The reason I say that is because I don't apply the principles aggressively like I should. And it doesn't mean I don't take, it's not talking about breaking risk parameters. It has nothing to do with that. It's talking about doing the job every single day. So we have a couple students that every day they post in the comments area, or every week they post, hey, these are the trades I made this week. Brian's one of them. He's constantly posting. So he's taken this system, he's learned it, and he applies it every single week. Every single day he's applying the system. I've had success. I was talking to my buddy James, and he was asking me, how am I doing, and I tell him how I'm doing, and he's like, wow, that's really good. But it's not based on the account sizes I have. You guys see some of my trades, they look really, really good, but I haven't applied the principles. And the reason why I say I'm one of the best, worst success stories, best in that I'm kind of lazy when it came to the Success Academy, and I'm successful with it. There's not many programs that you can do that with. And so, I wasn't lazy in learning it. It's just taken me a lot longer, but I'm lazy in applying it. And it's not because I'm lazy. It's more something Travis and I talk about, me overcoming an obstacle that's really keeping me back. So mentors will help you overcome those obstacles. And that's why I thought it was important that you guys really need to have mentors, and don't have competing mentors. If you follow someone that's totally contrary to our principles and what we talk about, one of us has to go. And we won't be upset if you tell us, hey, I got to go from you guys because I follow this guy and he's different. But one of us has to go. You can't have competing mentors.
Yeah, they should all complement. It's on that note, this is going to be a tangent, everyone. Sorry, I'm multitasking here. I was down $7,100. That was how much I was down in my account, my larger account. I was like, oh, while you were talking, I was like, let me hear. I was like, the market's falling further, and I'm losing more money. So let me close this out now. All right, so let me stop what I'm doing. Be present and center, Travis. All right, competing mentors. You also can't have competing values. This is what I meant as a tangent. I'll bring it back, I promise. One of my original millionaire mentors talked about you can't have competing values, how he would be at work thinking about his family. He's like, oh, I should be a family man. He wanted a close family, but he was a workaholic. So when he was at work, he was constantly thinking about his family. And then when he was his family, he's always constantly thinking about work. And he had competing values. And when you have competing values, you go nowhere. You literally it's like being schizophrenic. You're literally pulling yourself in two different directions and you stand still. So he had to restructure his business and his life. So sometimes he can do business stuff with his family. And so that way his values weren't competing. So like Grant Cardone is an example. He said he bought his jet so that he can spend more time with his daughters. So now, because he said if he didn't have the jet, he would be traveling around the world and his family would be at home. But now if he has a business trip, he just takes his daughters with him in their own private jet. And so that's an example of how you align everything so that your values don't compete. So he's aligning his value of I want to spend time with my family with business. And so now let's circle that back. If you have competing mentors and their values are competing, one mentor is telling you one thing and another is telling you something else, you won't go anywhere. You'll just stay dazed and confused and conflicted values. So they should complement each other. So like my business mentor helps me with breaking through mental barriers in business. And maybe I don't have one now, but my counselor could help me with childhood trauma, getting through that. and they don't compete with each other, but they align. When I handle the childhood trauma, that gives me free mental space now for my business mentor to level me up and take me to a new level. So that's a very important distinction that Peter talked about. A lot of people, it takes a long time to figure out when you have competing mentors. You're thinking just because they're both successful, you should listen to them. No. Yes, if their values are in alignment, but if they're completely different, you got to choose. You got to pick one or the other and go on. So is that?
Yeah, and I think it's important people know that it doesn't mean you won't be successful, because we talk about it.
Yeah.
You know, when I read that book, and I got to go back and read certain chapters from Tony Robbins, he talks about this, how even the book I suggested on the live call, which was How I Lost $1 Million Trading, right? That guy talked about it. When he did his research, he was researching these billionaire fund managers and these billionaires like Warren Buffett and Ray Dalio and Jack Bogle, who started Vanguard funds. Every single one of those guys have totally different strategies on how they made money in the market.
Yeah, that's true.
So he realized real quick it wasn't the strategy of how to make money. That ties into what we teach, which is the risk management.
Yeah.
He learned that they all have the exact same principle when it comes to risk.
Yep.
The principle didn't change, but the strategy to making money is different for everyone.
Yep.
And it doesn't mean it won't work. You know, we talked about this, buy and hold. You weren't a fan of it, and then you changed you're like, well, wait a minute.
Yeah, I did.
Buy and hold does work. You know, it's just like 401ks. A lot of people bash 401ks. 401ks can work as long as you manage the risk.
There you go. Yeah.
You understand what the 401k is doing for you. So just like mentors, it doesn't mean that one mentor is going to do a better job than the other necessarily. It just, you can't, you have to be on the same page with them.
Yeah.
And you can't compete. Otherwise, yeah, it's just you're going to go nowhere. So anyway, I probably ranted too long about that, but I think it's important that you just figure out, you know, I think the other thing, and I got this from Travis, we were talking about it before I asked him, you know, because some people will probably have the question, how do I find a good mentor? And I hate to say it, it almost sounds like, and from my experience and talking to Travis, because he's got more experience, he's been doing it, mentorship programs longer than I have. It's kind of trial and error, unfortunately. And I think the best way is word of mouth. If you know people or you can talk to people who have used a mentor. And I'm always cautious about so if I hear negative criticism about something or a program or someone, I'm always cautious to some degree on that negative criticism. Are they criticizing them because they couldn't make the system work, or are they criticizing them because the system did not offer the support it stated? You know, and we talked about that a little bit, right, Travis, where you go through the system and you're not getting any value, and you talk to the owners of the system, and they say, well, if you buy this system, you'll definitely help out. Well, that's probably one you should steer clear of, because it's like, well, wait a minute. The first system should have done something for me. And if it hasn't, you shouldn't be trying to sell me more. Right. But I think from that perspective, it's just a trial and error. Unfortunately, you just got to sometimes bite the bullet. I would say look for mentors that have some kind of reimbursement or trial period.
Yeah, go ahead. I'm sorry. I'm cutting you off.
No, that was it.
It's trial and error if you don't have a friend who can give you a referral. Trial and error is the least favorite route, because you will kiss a lot of frogs. I told Peter, hardly anybody knows this. I struggle with my terminology. At first, I wanted to say spent, then I wanted to say wasted, but I was like, you know what? No, because basically I invested close to 60 grand looking for a good mentor, and none of them panned out, none of them. So you could look at that as always wasted money. But for me, it showed me who I didn't want to become when I got to that level, which we talk about mentorship. I'm going to be one-on-one mentoring people again here soon. But going through that process showed me the type of mentor I did not want to be, the type of business I did not want to create. And it helped me spot because they all this, I wouldn't say scammy, but all the people who had Operation Money Suck, you could tell. Peter said it best: their program is designed to get the most money out you with giving the least amount of value. They all had certain things alike, and so my red flag started going off. The more I started going through that process, I'm like, nah, I've been through this process with the other guy. I can see where this is going, so let me cut back sooner. So if you don't have a friend who can give you a good recommendation for a mentor, then yeah, you unfortunately have to go through the trial and error. And yes, you can consider it wasting, but to me, it's all learning experiences because I learned a ton going through that. It's just going to take some time. So anyway, that's it. I don't want to get off on a tangent and start rambling. Plus, I'm on my fast, and my brain is super. I have brain fog. Like I can't even. Like last week, nobody caught that. I was talking, and then I was like, I don't remember where I was going. I was like total fast. So I was like, your brain's all slow, brain fog. I'm like in the middle of a sentence, and I'll forget where I was gonna say next. So
because you're not eating any food.
Yes, I hear you, buddy. Don't worry. It's a temporary process. I'll be back to full swing here soon. Yeah, I probably shouldn't be managing money, huh? If I'm sitting here with a brain fog. But let me go. I got some trades to close out here. So, hey, everybody, I hope y'all enjoyed this. Oh, and again, that's what I was going to tell everybody. People don't know, before I started online, I actually used to teach 101 in Atlanta. I was mentoring people 101. I stopped for various reasons. It's not scalable. My heart desires to help the masses, not one individual. Two, I didn't know how to sift people at the time. So I had clients who did well, like one of them named Victor. He teaches now in Atlanta. He teaches live classes in Atlanta. He would do well. And the other guy, I won't say his name, but he didn't turn into a good success story. Like he wouldn't do what I asked him to do. He was just too many stumbling blocks. So I didn't know how to sift people to figure out who was ready for that next level. But then I took a break, a hiatus, and then I started teaching online because, again, I wanted to help the masses. Well, now I've taught online. I'm seeing some people with six-figure accounts are struggling. So I want to start one-on-one mentoring again. So that'll probably be towards the end of the year. I'll start one-on-one mentoring again for people who are at the six-figure level to get you to that point. Peter may be one of my first clients. We'll see. He may be one of the new success stories. He's already a Success Academy success story. So now we'll see if he'll be a six-figure mentorship success story. But we hope you all enjoyed this recap. We will see you next week. As always, if you have any questions you want us to address or things you're struggling with, let us know wherever this video is posted, and we will be sure to load it up. All right, you all take care. See you next week. All right, bye-bye.
See ya.